Last week I presented this chart which shows that silver production costs are exponentially rising because of rising oil prices and declining ore yields. What I'm going to show you today is that silver prices are also trading along this exponential trend, and there's actually a pattern in silver prices that can be extrapolated as long as we understand that this is an exponential trend, not a linear trend. So here's the pattern. We start in October of 2003 because that is when the bull run started. The exponential curve line could be production costs, or it could be a general exponential trend line that encapsulates the bull run. It doesn't matter so much because price and production costs are closely linked, and they are fundamentally moving in the same direction. This curve is very slightly off, and you can see that in the 2004 highs, the 2009 blip through the trend line, as well as in 2012 when the 2011 cycle should be showing touching the trend line when the price made a second run up. So my presentation of this information is slightly off, not the trend itself. So what we are looking at are the monthly averages for silver. What I've done is isolate each period when price is trading above the trend line or price is trading below the trend line. I then colored the data red or green depending on which side of the trend line the price is trading. What we find is that there have been four distinct periods, a period below followed by a corresponding period above, each period extending approximately 2 years to 2.5 years. Each period has been defined by crossing of the trend line, and so far there have been 4 periods where silver price has crossed the trend line: February 2006, September 2008, September of 2010, and March of 2011. Crossing this trend line has corresponded with a dramatic rise in price or a dramatic decline in price, and you can see that in this chart. We can also see that each period above the trend line has so far been relatively congruous with its corresponding period below. The volatility in the price is also symmetrical, as well as exponentially increasing, which is the overall theme here. The trading range has gone from half of a $10 block to one $10 block, and now it's doubled to two $10 blocks. In theory, the next series will trade within 4 $10 blocks. So now that we see the pattern, let's predict the price of silver. The blue line on the right is the target period for the next crossing of the trend line. The blue area is 0.58 years wide to represent the greatest difference between the lengths of the previous periods. If this symmetrical pattern holds, we should expect to see the line cross within the blue area, not before and probably not after. Silver price has tried to cross the trend line multiple times in previous years, but has only successfully done so after a 2-year trending period. So the blue line is the next target. So it looks like we are triple bottoming in price, and from here we should see a rapid move towards the $41 to $43 target price, where the trend line will be crossed. Although if I established a better trend line, it would probably be closer to $45. Maybe when the trend line is crossed, the cycle that we've been discussing here will change. But I would be very surprised if we didn't hit the low $40 an ounce range before October 2015. Thanks for watching.